Hello and Assalamualaikum to Miss Faiza. My name is Rizal Harid. Today I will present you about the legal advisor service. Introduction. A company is a legal entity formed by a group of individuals to engage in and operate a business, commercial or industries enterprise. A company may be organized in various ways for tax and financial liability purpose depending on the corporate law of jurisdiction. Have three classification of companies, which is companies limited by shares, company limited by guarantee, and unlimited companies. Move on to the first point, which is companies limited by shares. A company is an unlimited company if there is no limit on the liability of its member is limited to the amount. If any unpaid on shares held by the member, a company limited by shares can either be a private company or a public company. Section 11 bracket 1 under CA 2016. For example of company limited share is if a shareholder subscribe for RM 100,000 share capital and he had only paid around 80,000 ringgit, his liability is limited to RM 20,000 ringgit unpaid of his share. On the other hand, if the shares are fully paid up, there is a further liability. Now let's move on to next topic, next point, which is company limited by guarantee. A company is limited by guarantee if the liability of its member is limited to such amount as the members are undertake to contribute in the event of its being worn out. Under section 10 bracket 3 CA 2016. A company limited by guarantee shall be a public company. Section 11 bracket 2 CA 2016. Under section 45 bracket 1 of the CA 2016, this is the example of following objects can be used by a company limited by guarantee, which is providing recreation or amusement, promoting science and others. Unlimited company. A company is an unlimited company if there is no limit on the liability of its members. An unlimited company shall either be a private company or a public company. Under section 10 bracket 4 and section 11 bracket 3 of the CA 2016. In the event the company is run out and has insufficient asset to settle its debt, the shareholder will be required to contribute to the asset of the company to enable it to settle its debt. There is 5 types of companies in Malaysia, which is public companies, private companies, except private companies, foreign companies, and government-linked companies. Go to public companies first. A public company, sometimes called a public held company, is usually a corporation that issues shares of stock. A stock corporation. In a public company, the shares are made available to the public. The shares are traded on the open market through a stock exchange. A public company is required to have the word Berhad, BHD, as part of and at the end of its name. Example of public companies in Malaysia is Public Bank Berhad, Telekom Malaysia, DRB Helcom Berhad, UMW Holdings Berhad, Pusat Malaysia, Genting Berhad. Private companies. A private company is a stock corporation with shares of stock are not publicly traded on the open market but are held internally by a few individuals. Many private companies are closely held, meaning that only a few individuals hold the shares. But some very large corporations have remained private. Private companies have the word Sendirian Berhad SDN BHD as part of and at the end of the name. Some private companies. Based on the CA 2016, a private company means a private company with beneficial interest of share in the company are not held directly or indirectly by any corporation. Okay, now next we move on to extant private companies. Based on the CA 2016, extant private company means a private company where beneficial interests of shares in the company are not held directly or indirectly by any corporation, no corporate shareholder, and which has not more than 20 members, none of whom is a corporation. If a private company fulfills the above definition of exempt company, it has the option of filing an exempt certificate to the register instead of the full audited financial statement. The exempt certificate provides information that the company is and has at all relevant time been an exempt private company. A duly audit financial statement and reports required under the CA 2016 has been circulated to its members and as at the date to which the financial statement has been made up. The company appeared to have been able to meet its liabilities as and when the liability falls due. On to next, which is foreign company. Foreign company under the Companies Act 2016, CA 2016 mean a company, corporation, society, or association or other body incorporated outside Malaysia. An unincorporated society, association, or other body which under the law of its place of origin may sue or be sued or hold property in the name of the secretary or other official of the body or association appointed for the purpose and which does not have its head office or principal place of business in Malaysia. Every foreign company desiring to carry on business in Malaysia shall register itself as a foreign company under the CA 2016 with Companies Commission of Malaysia SSM. A foreign company registered under the CA 2016 is commonly referred to as a branch office. Kensington Corporate Service Malaysia SDMBHD is a management service company in Malaysia and is able to assist you with registration and administration to your branch office. Now let's move on to government-linked companies. Government-linked companies, GLC, are controlled by the Malaysian government via the Federal Government-Linked Investment Companies. GLC can be defined as company that serve a primary commercial objective and in which the Malaysian government has a direct controlling stake. Example as Petronas, Malaysia Airlines System, Tenaga Nasional Berhad, Maybank, Telekom and Keretapi Tanah Melayu KTM. Financial report based on Companies Act 2016 and Financial Report Act 1997, which is accounting and other records, financial statement, director's report. Accounting and other reports. According to Section 243 to Section 251 of the Companies Act 2016 covers matters pertaining to the preparation and presentation of financial statement. The Act requires financial reporting standard, which is requirement of the Financial Reporting Act. We go through to the financial statement. The director of every company are responsible for the preparation of the financial statement in every calendar year. This financial statement, including consolidated financial statement, should give a true and fair view of the financial position of the company at the end of the year and financial performance of the company for the financial year. We move on to director reports. A director report for a financial year in relation to a company shall contain 1. The name of every person who was a director of the company during the financial year and during the period commencing from the end of the financial year and ending on the date of the report. B. The principal activities. On to elements of annual report. We have 6 points here, which is chairman statement, corporate government statement, audit committee report, statement of internal control, social responsibility statement and financial statement. Do with chairman statement first. Chairman statement. Chairman responsible to present operation of the various division of the companies, dividends, financial position, economic performance, major development, employees and future prospect. Government statement. Corporate government statement is completion of the board. Number of the board meeting held during the year and the attendance of the director at these meetings. Director's remuneration, director's training, dialogue with the shareholder, accountability with audit, And Director responsibility for the preparation of financial statement. Audit Committee reports. Audit Committee report provide a quarterly and annual snapshot of the financial reporting process, the audit process, information on the company internal control system, and assurance that the company is in compliance with laws and regulation. Statement responsibility statement. A statement of responsibility is a statement relating to the identification and function of any person, families, or corporate bodies responsible for the creation of or contribute to the realization of the intellectual or artistic content of a resource. We go to financial snap report. This section of the annual report includes the following: director report, auditor's report, and financial statement. Now we go to legal requirement in Bursa Malaysia Security Berhad, which is main market is a prime market for established companies that have met the standard in terms of quality, size, and operation. Potential issue for the main market must demonstrate that they have achieved minimum profit, track record, or minimum size measured by market capitalization. Its market is a sponsor-driven market designed for companies with growth prospect. It was formerly known as the Nasdaq market prior to 3 August 2009. Sponsors must assess suitability of the potential issues, taking into consideration attributes such as business prospect, corporate conduct, and adequacy of internal control. Main market and age market provide companies with greater visibility via the capital market and a clearly defined platform to raise funds from both institutional and retail investor. And lead market is an advisor-driven market which aims to provide emerging companies, including small and medium-sized enterprise, with greater fundraising access and visibility via the capital market. It is accessible only to sophisticated investor, as prescribed under the Capital Market and Service Act 2007. That's all from me. I will pass to my friends Emil.
Thank you, Rizal. And now let's move on to my point. But before we move on to my point, let me introduce myself. My name is Emil Uzrin bin Abdurrahman, and my ID is MDA 1906 and 061, and I'm from DIA 4A. Okay, now let's move on to my point, which is advantages and disadvantages changes from partnership to company. Okay, the advantages is, first is limited liabilities of the directors or shareholders. The shareholders and directors of the company are the only one that is liable for the losses of the company to the extent of their personal contribution. In other words, their losses are limited by the amount of money they have invested in the company. So, and then let's move on to my second advantages, which is easy to gain public trust, which is, as a business entity, it's easier for a private limited company to foster trust in itself as compared to a partnership firm. And then my third advantages is easy access to funds. It's easy for private limited company to access funds from venture capitalists and banks. And then my fourth advantages, which is good for startup registration. It's far easier for a private limited company to get the status of being a startup, as the entity is already legal. The due diligence required is far less than compared to a partnership firm. So it's easier to start a private limited company than starting a partnership. Okay, and then my fifth and the last advantages of changes from partnership to company is uninterrupted existence, which is, in partnership, changes in partner leads to dissolution or formation of another partnership firm. While in private limited company, any changes in members or directors does not affect the company's existence. So in partnership, if your partner have something to change, it will affect the company. But in private limited company, any changes doesn't any if your member do changes, it doesn't affect the company. And then that's the advantages. And now let's move on to our disadvantages. The first disadvantages is registration process. The registration of private limited company by shares take longer period and involves a process and costs which are not applicable to sole and proprietorship and businesses names. However, once registered, private limited company enjoys a wide variety of powers and rights. So it take longer to register for private limited company. And then the second one is compliance formalities. A private limited company requires a range of compliance post incorporation. It is required to hold board meetings, get the accounts audited, maintain statutory register, and file annual return with the company's registry each year. So it's a lot of work. And the third disadvantages is division of ownership. A major disadvantage of private limited company is that it requires minimum of 2 persons to act as directors and shareholders. So it means that you need at least 2 persons to act as director and shareholders. And then our fourth disadvantage is restricted trade of shares. The restrictions placed on the sale of shares limits the options in which shareholders have to liquidate their shares to raise capital for others endeavors that they may interested in, which means that they have to use their own money to raise their own capital. Yeah. And then my final the fifth and final disadvantages, which is restrictions on public participation, which is a private company is prevented from raising capital for its businesses by inviting the public to subscribe for its share. This may be a limitation to the prospect and growth of the company, which is if you are in like private limited company, it's hard to do a public participation. Now let's move on to my second point, which is differentiation the element disclosure in financial statement between company and partnership. There is 5 differences, which is first is balance of sheet. In company shows the totals of shareholders only, while in the partnership it shows for each partner with the total. The second one is ownership. If in ownership of a company, many owners as many as they are share of stocks. In partnership, the owners are limited of groups. And then third is statement of equity. In company it owns column for total equity, while in partnership it shows that each partner's share of business equity along with the total equity. So basically it depends on the partners, each of the partner in the partnership. And then the fourth one is income statement. In a company, the income statement shows change in equity where changes in share capital, profit, revenue and other capital reserved during the year. While in the partnership, it shows the distribution of profit or loss for each partner. So it shows that the profit or loss for each partner, every partner in the partnership. And then the fifth one and the final one, which is distribution of profit and loss. In the company, like a limited company, like a private limited company, impose tax separate legal entity. While in partnership, distribution according to the partnership operation agreement. Now let's move on to my final point, which is the conclusion. In conclusion, there are so many differences between partnership and company. In partnership, it has its own type of advantages, but also has its own disadvantages. In a company, it's also have its pro and cons, just like in partnership. So we need to really think and be sure to pick whether we want a partnership or our own company. We need to really understand each component between the partnership and company, because it really do matters. So we have to choose between partnership or company real wisely. Make sure that to pick what suits best for you, for your own benefit, and really knows the outcome that it may affect to your business. That's all from me. Thank you.